welcome everybody. This is the beginning of our webinar, and I am Bill Petrovic. We're talking about credit basics, but deeper than that, building and repairing your personal credit. So this is a SCORE webinar. SCORE is a volunteer organization that I am a member of. The SCORE volunteers all mentor clients, and when we promote our workshops, we also promote our mentoring. So I'm sure you've seen the opportunity to click on the screen and sign up for mentoring. And this has been an effective way for us to grow our client base, which by the way, right now is business is booming at SCORE. We're scheduling like 1 and 2 weeks out, which is, it's good that we're busy, but I wish we could, have you call today and get mentored tomorrow. But we're interested in helping everybody. The mentoring is free. The sessions are 1 hour, and we do this on a co-mentoring basis. So actually, you get 2 mentors. Our speaker today is Wendy. You can see her sitting there, getting ready to go. She's broadcasting live from downtown Indianapolis at her bank branch. Wendy is the branch manager at Centier Bank, and they're located at 50 South Meridian. So right off the circle there. And, she loves teaching financial wellness topics, and this is definitely one of the core pieces of that. Today's webinar is going to last about an hour. I've scheduled it for an hour and a half, just in case we have a lot of questions, which we're happy to have. If you have questions, use the Q&A. I'm monitoring those while Wendy's doing the webinar. And if it's apropos to the point that we're at, I'll talk in, and if not, I'll hold them to the end. We will be sending you, the participants here, a copy of the slides, and also the bank has another handout that is called Credit Top 5 Tips, which will also include in that message to you that comes a few days after the webinar. We are recording this webinar, and we will transfer it to our YouTube channel, which is, if you go to YouTube and search Indianapolis SCORE, you can see all of the webinars that we've done over the last couple years, and you can watch them. And this one will be posted there too. It takes a few days after the webinar to do that. That's why you won't get your slides for a couple days. We'll package that all together, but definitely you will get that. So Wendy, I'm finished with my part. We're ready to go, and you've got your first slide up, and take it away.
Thank you, Bill. Welcome, everyone. As Bill said, Wendy with Centier Bank. We are the largest family-owned bank in Indiana, if you have not heard of us. So today I'm talking about credit basics. Gonna get a little bit into how can we help you build and repair at the same time. So like Bill said, please post any questions that you have, and we'll answer them as we go. So our agenda today: what is credit? Credit reporting, your credit score, establishing credit, and protecting your credit. So just so you guys know, I move a lot. I'm used to standing and moving my hands and walking around the room. So I promise I'm fine. Don't call the ambulance when I'm moving like crazy, but it's a little different sitting in a room. So what is credit to you? So when I think about credit, I think about my buying power. If I want to go out here tomorrow and buy a new car, am I able to do that? When I talk about maybe I want to go out and buy a new house, the market's crazy right now, but I want a new house today. So am I going to be able to do that today? Types of credit. We have our revolving credit. We have our charge cards, service credit, and installment credit. So one thing I think of when I think about revolving credit is my credit cards, maybe a home equity loan, charge cards. Some people say, well, what's the difference between a charge card and a revolving card or a credit card? Well, a charge card, you have to pay the full balance every month. If you don't, sometimes they won't allow you to have credit again, or you get tons of fees associated with it, but you have to pay that balance in full every month. Service credit, we think about our cell phones and our gym memberships and our utilities, and then your installment credit, your car loans, your mortgages. We get into credit reporting and we're looking at our credit report. I don't know how many people have actually pulled their credit reports, but credit report and credit score are two totally different things. Your credit report is going to list your personal identification information, your social, what names you've gone by from being married, or even name changes. It's going to have, sometimes it will have your employment history on there as well. Has your address. Sometimes we'll list phone numbers that you've recently had. Then as you go from there, it gets into public records. And then accounts that have been assigned or sold. So judgments, bankruptcies, collections, they're all on this credit report. Credit accounts. This is your biggest section. This is anything that you've held as far as credit goes. It's going to list what your balance was, if you paid on time, if you were 30, 60, or 90 days late, and how many times you were. And then it lists inquiries, places that you have applied and they've checked your credit. You have 3 credit reporting agencies, and these are Equifax, Experian, and TransUnion. And if you listen to any slide that I talk about, please listen to this one. Annualcreditreport.com is a free credit report agency. Please, when you want to check your credit report, please go to annualcreditreport.com. There are a lot of false companies out here that will say that they will give you a free credit report. But Annual Credit Report specifically will pull your credit report from each credit reporting agency. So when you go in there, it will ask you identification information, and then it will bring up whatever report that you want to see. If you've never done this and you don't do this regularly, I suggest that you pull all 3. Pull all 3 for credit reporting agencies and check out your credit report. It's not going to give you a credit score ever. It's going to give your credit report. Why is this so important? It's so important to see what's on your credit report because there are mistakes that can happen. You can have something that's listed more than once. You can have items on there that have been paid and they sent you to collections by mistake. There could be items on there that you've never ever seen and someone could have your information. So this is why it's so important to check this. I do this every year. Every year I pull all 3 credit bureaus and I go through them. What is your credit score? Credit scores are numbers based on your credit report. So higher credit scores present lower risk to the creditors. If you don't have credit reports, then you don't have a credit score. Some people ask, is it better to have no credit score or a bad credit score? And it's easier to build a no credit score than it is to fix a bad credit score. But if you have no credit score, it still means you're going to probably have to pay higher for something, higher interest rates, and it could be harder to buy larger ticket items that you're looking to finance. Biggest factors that go into your credit score are whether you repay your debts on time. Payment history is 35% of your credit score. 30% is the amount owed. Length of history, new credit, and types of credit used are your lowest factors. So just making sure your payment history is good and the amount that you owe compared to your balances or your available is huge. That's 65% of your score. Here's a little breakdown of what your credit scores kind of look like. So the average person who has an 808 credit score, which is in our exceptional field here, compared to someone that has a 5 or 638 credit score, the average that they pay, that the 638 person pays, is $1,000 more a month than the person that has the 808 credit score. You may say, well, why is that? Well, because the person with the 808 credit score has probably lower interest rates, maybe cards that have zero balances or zero interest for a while. Their payment for their car, their interest rate for their car may be lower. When they did their utilities, they probably did not have a down payment or deposit that they have to make. Same thing with their car insurance. Car insurance checks your credit scores now, and the better your credit scores, the lower your car insurance seems to be. So there's so many factors with the good credit score to save you money. What if I have no credit? What are some things that I can do? So apply for a secured credit card at a bank is one of them. So what that means, a secured credit card, if you haven't heard of it, you go to a bank and you apply for a secured credit card. What happens is, say you apply for a $500 credit card. You would put $500 into a savings account, and then the bank would hold that $500 and issue you a credit card for $500 with a limit of $500. So you could use the credit card, but you don't have access to the $500 that's sitting in the savings account on hold until you close this credit card and pay it in full. But the credit card works just like a normal credit card, only your limit is $500 or as much as you put into this savings account that is on hold. You can also become an authorized user on another person's credit card. They would have to be the one to call and have this set up, but this is an option too. I can add my daughter to my Chase credit card, and if you trust the person not to go crazy, which my daughter is a little young, I may not trust her not to go to the mall and get her a new outfit, but you know, you can do that and their credit can build off of what you're already doing. You can ask rent and utility payments to report to the credit bureaus. This is not as common, and it is harder to get them to report that. But remember, they will report if you do not pay them on time or you are late. So Right now, they do not report unless you ask for it, or in some cases they still won't. But they will report if you are late or you are not paying them on your credit bureau. Why is good credit important? We kind of touched on this earlier. Some places you can't get an apartment if it's not good. Buy a car or a house, admission to college. I don't know if any of you have seen this, but a lot of companies, when you're applying or you're trying to join their company to work there, they're asking for, or they're pulling your credit to see how well you're paying back your debts. Establishing credit. So a good way to establish credit, let's create a spending plan. Let's live it. When you create a plan, you have to follow through with the plan. So create it and live it. Pay your bills on time. Always pay them on time. If you've got into a bad situation and you need help, call the companies. Call the companies and tell them, I'm having trouble with this. Please don't report me to the credit bureau. What can I do to fix this? Keep your credit card balances low. They say don't spend more than 30% of your available or of your full amount. So if you have $1,000 available to spend on a credit card, you want to keep it at $300 or less. Develop good credit and build on it. So as you're making your plan, you're living by it, you're developing, keep it going. Keep going and going. Don't get too much credit. So don't go out here and apply for 7 different credit cards and rack them all up and spend all this money because you want to have a shopping spree today. You know, make sure credits, auto loans, mortgages, credit cards, mix your credit types. When you're closing accounts, we know sometimes that this just has to happen, but be cautious of it. If you're closing an account, you know, you pay off an auto loan, you don't have any other option, but it's going to be closed. Mortgage, you buy another house, that is going to have to be closed. And speaking from experience, when I sold my very first house and I had it for 10 years, when I pulled my credit a year later to buy a new house, because I went into an apartment for a little while, my credit score had fallen 28 points for closing that 10-year account. So it builds back up over time, but know that that can cause a little bit of a dip in your credit score. Know your debt to income ratio. So we, as lenders and being at a financial institution, you have to be under a debt to income ratio at a certain point to get a mortgage, to get an auto loan, to get a credit card. We want to know that you're not overspending. Demonstrate stability. So how would you demonstrate stability? Show them that you're making bills on time. Show them that you have had a certain employment for a certain length of time. A lot of times lenders look for 2 years of employment history. Contact your lenders if you fall behind. That's a big one. Contact them. If you're making an effort, normally they will not report you to the credit bureaus. Anyone heard of credit repair? If you have, or if you have reached out to companies, we really want you to beware of companies that are asking for money up front or guaranteeing that they're going to remove your bankruptcies or your late payments. That does not happen. And these credit repair companies can get very, very, very costly. They will promise things that cannot happen. And a lot of times, everything that they're doing, you can do for free. We talked a little bit about common errors on credit reports, but some identity errors could be your name, phone number, address, or social security numbers could be wrong. Account status, something was opened or closed that you did not do, or things are closed, but they're still really open. Dates, debt amounts, incorrect limits, balance errors happen a lot. So, you know, it may say you have a balance of $100, but you paid it off and it's been paid off for months. Those happen all the time. I just went through mine and had to send in disputes multiple times. Before we go into this one, I want to talk about disputes a little bit. So disputing your credit is actually a lot easier than you would think. So whenever you're disputing your credit, you can go directly to each credit bureau. In there is a specific part that says dispute something on my credit report. Usually you have to create a login so that they can get back to you when they've revised it or they've found out information, because what these credit bureaus do is they investigate. So once you put in a dispute, they have 30 days to respond to you. And the response may be something like, we are looking into this, we've contacted the company, we're waiting to hear back from them. Or we've reviewed this, you are correct, we're removing this from your credit report. Or could be, we've looked into this, we have contacted the credit company that you're disputing and this is yours. We will not be able to remove this from your credit. And then there are other topics or other items that they give you that you can do to maybe investigate it further or to try to dispute it directly with the company. So what questions do we have? But before that, real quick, I want to talk about Credit Karma. And I know a lot of people use Credit Karma or they use another company that they check their credit scores with. Credit Karma is great to kind of review your credit, see kind of where you're at. But I just want you to know that if you use Credit Karma and then you come like here to Centier Bank and you want to apply for a loan, more than likely, I'm going to say probably 98% likely that the credit score that you see is different than the credit score that I see. So I would see probably a credit score that's a little bit lower. Credit Karma uses a scoring model called Vantage 3.0, and it usually trends higher than a lot of what other consumers use to pull your credit. A lot of consumers use FICO. So FICO stands for Fair Isaac and Company. They've been around since 1956 and they measure consumer credit risk. So a lot of companies use FICO and their scoring model is just different than what Credit Karma uses. And you're going to see lenders use FICO more than not. So here's a little clever credit quiz that we have to go through. And if you want to just play along, you can. Which of the following is not a major credit reporting bureau? And if you picked A, FICO, you are correct. FICO measures your credit and is not a reporting bureau. Which of the following information is not included on your credit report? And if you picked email, you are correct. They do have your social and your birth date and your name. So when you pull your credit report, you definitely want to check those out, make sure those are correct. The website to access your free credit report with no fees is? And that would be really funny if there was one that was dudewhere'smycredit.com. But the answer is annualcreditreport.com. The single most important factor in building good credit is? And the answer is making payments on time. Again, that's 35% of your score. If you are concerned with identity theft, you can get a credit freeze. We didn't really talk about credit freezes, but we will in just a second, which will prevent your credit report from being run or any new credit sources from being opened in your name by contacting. So you can contact all of the above. So credit freeze is, you can call any of the bureaus, but if you're going to do it, I would do it for all three of them. It's a great way to prevent identity theft, especially for anyone who has been a victim of identity theft. They probably already have this or have had it in the past. You know, we've had breaches from a lot of large companies around us. And if you, I had an insurance company that I had, and they put a credit freeze for a whole 5 years for me for free. Had a company that monitored my credit and all that, but all of these companies will put a credit freeze on your account, and anyone that's trying to inquire about your credit score or your credit, or anyone that's trying to apply in your name, you will be notified, and you will be able to say whether it was you or not before they will give any information out. Also, we have a lot of clients here that have a credit freeze on, and then I ask them to call the companies and unfreeze it for 24 hours so that I can run their credit, or it will not give me a score at all. It will actually come up and say this client's credit is frozen. All right, so what questions do we have?
Okay, we do have a few. One came in on the chat, and I got access to that too. It says when you have an error on your credit report and you do report it, but they tell you it's yours and they won't remove it, what's the resolution process when you're sure you're right and they're not cooperating?
So I would continue to work with them, but also reach out to the company that is reporting it because the company may be able to do something a little bit faster than the credit bureau, since they're saying that it is. And the credit bureau should be able to give you a contact number and the name of the company and all of that as well.
Okay. Another question is it a good idea to use the website MyFICO.com? And if so, is there a way to tell which FICO scores are being used by the people who are checking out your credit scores?
I don't know anything about MyFICO.com. I don't trust sites like that. I do trust annualcreditreport.com, and I do trust the credit bureaus. The credit bureaus can give you a credit score. They normally have you go into a different like membership with them so you can see it. Normally the credit bureaus do not give you your score for free though.
Right. So someone asked if they get a recording of this webinar, and the answer is yes. We are recording it, and it will be posted to our YouTube channel, which we will give you a link when we send you the thank you for coming to the meeting email, which will also include a copy of the slides and another handout from the bank. So we got that covered. We have time for more questions. So if you're thinking of one, just go to Q&A and put it in. And I had a couple thoughts as we went along on this. Wendy, you said that you should try to keep your credit balance 30% or less of your credit limit.
Correct.
So I have a credit card and the credit limit is $1,000. Should I also be asking for increases in the credit limit as another way of giving myself a little more headroom?
You can absolutely. That's another option as well. But just be careful when it comes to debt to income also with that. But if you're keeping it lower, or you know you need to make a large purchase on something, I definitely would reach out to the credit card company and say, hey, can you raise this so that your utilization looks lower?
Right. So it's kind of a self-discipline thing. If you knew you had a $25,000 credit limit, that wouldn't tempt you to spend $25,000. If you're that kind of person, it's okay. But if not, be careful, because you're tempting yourself more.
Exactly. Exactly.
Okay, can we have a little discussion here about credit card fees? So someone is saying, hey, I got a credit card and it has fees. I'm thinking of getting another credit card that doesn't have fees, but now I'm worried about canceling the first card because it's going to hurt my credit score. How do you put all that into the mix?
So credit cards that have fees, those can either be, I've seen a lot of credit cards that have fees that give you points, like a Southwest credit card or something like that, maybe for airlines. Maybe it's a $99 annual fee. I would say if this is your oldest credit card, do not close it. You can keep it open. And I know you're trying to save money, but if you only have that credit card and then you just got another one, I would say at least keep that other one open for a good another year to get the other credit card established, so that you don't look like you just have brand new credit and you close something that's had credit over a long period of time. Credit cards can have very high interest rates. It's usually according to what your credit score is and how you utilize the credit card. I would say look for credit cards that give you like a no interest for a certain amount of months, but be careful if you're transferring balances, because a lot of companies will have a balance transfer fee and it can be pretty high. So it's going to give you that fee on top of it as well. If you don't think you're going to pay it off over a decent amount of time, then I would caution you to do that. Because then after a certain amount of time, if it says, oh, zero balance transfer, 0% for the first 12 months, but then after that 12 months, it goes to 25%, it probably didn't save you any money that way if you're not going to have it paid off in 12 months.
Okay, good. There's also worth thinking about, what is the right number of credit cards to have? Is one enough? Are 58 too many? You know, I've seen people with wallets that amaze me. I mean, those are all your credit cards? Wow. Is that good or bad? And how do you hit that happy medium?
So the happy medium is a good mix of credit. So not just credit cards, but, you know, auto loans or installment loans. So there's not an exact number that they say, and that's where credit gets kind of tricky. And I joke around with people and say, you know, credit's like a game. You know, it can change. My credit score could have been 808 this morning, and tomorrow it'll be 765. It's constantly changing. It's constantly moving. So I would say, you know, you don't need to have a bunch of 58 credit cards. What do you really need 58 credit cards for? I think a lot of times people have more credit cards because they get a special percentage off when they open it for the first time. You know, Kohl's is a great one that does that. JCPenney does that. Macy's does that. So they end up getting it, and then it kind of sits there. With the credit cards that I do that with, I have a certain time that I use them. So like my Macy's credit card, I usually don't use it till Christmas time because there's special discounts if you have one around Christmas time, and then I pay it off. Where it comes back to, Bill, what you said, if you don't have self-control, it's probably better just to have one. But if you have self-control and you have a good range of credit, I would say, you know, five or six maybe at the most. And it's what you're using it for. You know, are you using, and what your interest rates are? Are you losing money on it when you have it, or are you fine with it just sitting in your wallet, not using it at all? What gets a little hairy is you have all these credit cards and you're not using them at all. So then what's it doing for you, and what's it doing it for your credit? It's not helping you.
You're mentioning interest rates, but isn't that a sign that you've got maybe a little problem because you're not paying your balance as it comes due? Doesn't that hurt your credit score not to pay the full balance every month on your credit card?
No, that doesn't help. That doesn't hurt your credit. It's when you say you have a balance of $1,000 and you owe $700, or you have a credit limit of $1,000 and you owe $700, and you're just paying the minimum payment. That's hurting you because your utilization is too high. And it looks like you're never getting the balance paid down. If you, in your case, you know, you said, what was the scenario again?
You end up worrying about the interest because you're not paying enough every month to avoid the interest.
Right. And the interest can get really high, but also if you pay it off,
Right?
that will help your credit some because you don't have that utilization, but you want to make sure that it reports monthly. If you're paying it off before it actually reports, then it's not doing anything for your credit at all.
Okay. Here's another question. This is more an individual situation. The person says they have what they're calling phantom debt that is from 30 years ago that was paid, but it's still on the credit report, and it's like so long ago there's no more documents to provide, et cetera, et cetera. Any tips on how to deal with that? It sounds like the problem's been there way too long.
Right. Does a company just keep buying it back, or because after 7 years, things come off of your credit? It's supposed to be deleted from your credit report after 7 years, but a company can turn around and buy it from another company, or the company could come and say, okay, we want to refile this. They can refile it. Bankruptcy can't do that. It's gone after 7 years, 7 to 10 years. So some bankruptcies can stay on your credit for 10 years, but most come off after 7. But in this case, the only time I've ever heard of that is if a company, if they sell it and then another company buys it, or they just keep refiling it on you. I honestly don't know what to do in that situation besides calling the credit bureaus and saying, what else can I do? You may actually need to talk to a live person in this aspect and see why it's still on there after 30 years. I've never heard of that.
Okay. Does the credit report have anything to do with whether you're employed or unemployed?
No. Sometimes it will list your employer at the top, but it doesn't have anything to do with your being employed or unemployed.
So if you get laid off, that doesn't hurt your credit score?
Correct.
Or if you retire?
Correct.
Okay. So here's a question. I took a piece of this to get that foundation. I'm in my mid-70s. I own my own home. I own my own vehicle. I'm authorized user on our credit card. We pay the balance every single month. I'm not employed. When going to buy a new car, there was a big advantage to finance it. But I was informed that I have no identity and lower credit scores because we have no debt. Is this common? And is this a problem retired people have?
That is common. I've seen that quite a bit with retired individuals because they do end up having everything paid off, and they don't think they need to continue to establish the credit because they have everything they need, and they don't want to have debt that isn't needed. In these cases, you know, we would suggest that they have some type of credit card, which you said you have, but it almost sounds like the credit card isn't reporting correctly, or maybe it's only reporting to one credit bureau. So that could be common too. So like here, we only report to TransUnion when you would apply for a loan or a credit card or like a home equity line of credit with us, but our mortgage department reports to all three. So that could be something too. So maybe a credit card that actually reports to all three credit bureaus. But yes, it is something that we see in retired individuals. Home equity lines of credit are used a lot of times in this instance to help people keep their credit scores going and keep them up for retired individuals. You can always reach out to me and talk about a home equity line of credit if you want information on that. But we see a lot of our retired individuals get a home equity line of credit for safety, as well as if they needed the money in the future, or to just keep their credit established and keep their scores up.
I'll comment on that from my own experience. I'm retired, and I think pretty much my only real reportable activity is my credit card, but I am receiving my credit score periodically from a subscription I have to one of the credit reporting bureaus, and the credit score is just fine. So, and I feel like I'm in almost a parallel situation to the person who asked that question. But you mentioned that maybe their bank isn't reporting to all of the credit bureaus, and maybe that's something they could deal with, or how could they make it better? What would they do? What would be the action plan?
So I would look for a credit card, or credit card's going to build faster, but I would look for a credit card that reports to all 3 credit bureaus, and they can just instantly ask that if it reports to all 3 credit bureaus. And if they pull their annual credit report, they're going to see which bureau it's reporting to as well, and see if it's reporting to all 3.
Right. I'll go out on a limb here. It sounds like it's one of those situations where they say you could buy this car and no payments for 1 year, 0 interest or whatever. And if you don't want to do that, then you're not taking their financing plan. But I always thought that if you don't take their financing plan, it puts you in a better position to actually negotiate the price up front. Don't know that for a fact, but that would be my comment on that. I don't know. It feels like it isn't always a take it or leave it. Finance it and get the deal, or pay cash and get screwed. You should be able to get the benefit both ways. Any thoughts on that?
So from experience, usually if you have cash, they're going to, like you said, work the numbers a little bit better for you compared to the financing part. But from very recent experience of buying a new car, the auto market is completely outrageous right now, especially if you're trying to buy a used car at this moment. And if you're trying to buy a new one, you're lucky if you have one on the lot that actually has a chip in it that it needs. But they're being a little more stingy with the auto right now and bringing down prices for you. So it could have been that as well.
Okay, we got some feedback from one of the questions that said, yes, indeed, the debt was resold several times. And you were talking about the 7-year limit, and maybe that's tripping things up. I have here a long question, but we have a few minutes, so I'm going to go ahead and read it.
Sure.
A wrongful eviction from 2015 is still on my credit report. A judge allowed the landlord to get away with misinforming me about Section 42, where water services were free unless usage exceeded a certain amount. Rather than confessing their error and meeting with me to review this clause in the lease, they filed an eviction. Instead of the judge determining meaning of the utility allowance clause, he confirmed that it was confusing and ordered the eviction for me and pay $22 in question. and add attorney's fees. He said I could appeal, but appeals court told me I couldn't. This obligation exceeded my payment ability as expressed during the application process. I've been homeless because of this. One credit item. How do I get this fixed? Wow.
So who is it a collection agency that's reporting it? If it's a collection agency, I would probably reach out to them to try to, you're probably just gonna have to pay it. I mean, if a judge ordered it, you can, if you guys have things on collections, you can reach out to the collection companies and ask to pay less. If you pay less, when you're making the negotiations, make sure that you tell them, once I pay this, I want you to remove this off of my credit report. Because that's going to help your credit score a lot better than if they just put it as being paid. If they can remove it and you want to ask them to remove it, once you pay it, that will help. In this situation, because the judge was involved and courts were involved, I would say either you're going to have to wait the 7 years, which is what, next year, or you're going to have to pay the fees and go with the or reach out to the collection agency and try to get some of the fees knocked off.
Okay, have a comment here from someone else who just bought a car, and they said it was like, yeah, you get the deal if you finance it, but if you don't finance it, you're not getting a deal. So I guess it all goes back to the supply and demand and market conditions. Things are a little upside down right now with the way interest rates are and the shortages of used cars and the chip shortage and all of that.
I turned in my 2019 Jeep Grand Cherokee and received more money for it than what I paid for it in 2019.
Yeah, I talked to somebody who bought a car from CarMax and he's had it for 2 years, and they sent him a letter and said, we'll pay you such and such for it. And it was $400 more than he paid 2 years ago. So that's
crazy right now.
It is. Wendy, could you review one more time the ranges for good and fair and excellent credit, kind of those numbers, so people can.
Absolutely. So it didn't take me forever to get through the PowerPoint. I would just pull that one back. But so we have somewhere in here. Oh my goodness. So your ranges are anything from 800. Where did that go? In my world, anything 740 and above is going to get you the best rate.
Okay.
Okay.
So that's like the big cutoff is correct. 740.
740 mortgage is going to get you the best rate. Your car loan is going to get you the best rate. 740, you're doing great. Your about 680 to 740, you're pretty good. You're going to get a good rate, but not the best rate possible. And then 680 to about 640. So 640, you can actually still get a mortgage, but your rate is going to be higher. They're going to probably ask for a little more documentation. But 640 to 680, you still can get finance for some stuff. A lot of credit card companies like to see the 680 score. But we'll let you go down to 640. 640 and below, you're probably not getting approved for much of anything.
Okay.
At that point.
And could you repeat what happens after 7 years with negative things on your credit report?
So after 7 years, usually it gets deleted off of your credit report. Some companies will re-report it and add it back onto your credit report. I've seen it in a couple instances, especially larger amounts. So maybe you have IPL. IPL is Indianapolis Power and Lights. It's been around for years. It's not going anywhere. Say you owe them $1,000, they may turn around and re-report it after the 7 years.
Just to be mean.
Yes. Yes.
Okay. Here's the final question. Does student loan activity have anything to do with your credit report?
Yes, so it is actually reported on your credit bureau. It is deferred. A lot of times they have deferments on there. So it will show that it's there, what the balance is, but will show that you owe 0 if it's in deferment. And it will also show that it is in deferment. If you are still making payments, even though it's in deferment because you've decided to go ahead and start paying on it, it will show that also that you're making payments on it. It does not affect your credit score if it's in deferment, but once it comes out of deferment, it will start reporting to your credit bureau.
Great. Wendy, that's it. We got through all the questions and all the slides. And actually, I feel real good about the questions because it gave people a chance to learn their own situation and get an expert advice there. So I want to thank you very much. We had good attendance here and I appreciate everybody. And as said before, you will receive a copy of the slides as well as a handout from the bank, as well as a link to the video recording here. So I'm going to close out the webinar. And again, Wendy, appreciate you giving up your lunch hour to do this today for SCORE.
Thank you, everyone. Thank you, Bill.
Thanks a lot. Bye.